Hey guys, welcome back. Now, the battle for the best layer 1 smart contract platform is on. Unlike Bitcoin, which seems to have carved out and dominated its own unique position in the crypto space, Ethereum is facing increasing competition. Ethereum pioneered the smart contract category over 7 years ago, but now with breakthroughs in tech and companies choosing different trade-offs, the competition has never been more fierce. And today we'll be comparing one of the newer, most promising layer 1 platforms, Avalanche, against the market leader, Ethereum. Is one better than the other? Is one a better investment? Will one make you more money? And so in this video, we'll be looking at the Blockchain Trilemma, and yes, it's still relevant and puts everything we're about to discuss into perspective. Then some quick stats, so you can see a side-by-side comparison of some key metrics to give an overview of each chain. Then we'll look at how they're both doing right now when it comes to network size, network growth, and also traction. And then we'll finish up with some simple pros and cons for each. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. So, when Vitalik Buterin co-founded Ethereum, he proposed the Blockchain Trilemma. And although some companies claim to have solved the trilemma, I'm going to explain why this probably isn't the case. Ready? Let's do this. So we're going to kick things off with the Blockchain Trilemma, which basically says there's 3 parts to most blockchains. There is the level of decentralization, level of security, and the level of scalability. And it's said that it's quite likely to get 2 out of 3, but very difficult to hit all 3. And this normally comes down to the level of decentralization. You see, if there was only one node or one server, then it's only one place where it has to come to consensus, which means you can ramp up scalability. However, having one central place, it is easier to attack, so you do miss out on some security. Now, the more decentralized you are, typically this has to do with how many nodes are running the network. Then more of the nodes have to come to consensus, which means it is slower, but then you get increased security and decentralization, hence the Blockchain Trilemma. Now, this all kicked off with Bitcoin, and the reason the Blockchain Trilemma will probably continue is that it's all relative. There is a wide spectrum of scalability. How fast is fast? Is it 1,000 transactions per second? Well, what about a competitor bringing out 10,000 or 100,000 or 1,000,000? And it constantly changes. What about decentralization? Technically, something that has 2 nodes is decentralized. It's not from one central place. But what about 10 nodes? What about 100 nodes? Technically, these are decentralized, but only compared to other competitors. When someone comes out with something that has 100,000 nodes, then again, it constantly changes. So Bitcoin by itself would actually be right bang in the middle. It was perfectly secure, decentralized, and scalable, as there were no other competitors. But this changes when you add things. So the next one that came onto the market was Ethereum, and now with Ethereum in the mix, it wasn't quite as decentralized or secure, but it was faster, so it moves the position of each piece. Then you add another one, Solana hits the market, which had a lot less nodes, super fast, and now again the pieces move. Then we have something like Avalanche, which seems to be a perfect blend. It is quite fast, it is quite secure, it is quite decentralized, but then we have Ethereum 2.0, which is going to launch. And again, once this launches, the pieces move again. And this is why the Blockchain Trilemma can't really be solved, as it's a constant and shifting, evolving environment. And security is ever changing, decentralization's ever changing, scalability's ever changing. And what it actually reminds me of is evolution. So I grabbed a map of evolution, and this is a great analogy to show what is going on in the crypto space. So we have Bitcoin launching down here, and then we have other protocols trying to do the same thing with slight differences. Some of these protocols die out. Then we have something like Ethereum, and Ethereum continues on. And then again, we have other layer 1 smart contracts branching off and branching branching off. And as this evolves, we then get more competitors branching off all into different directions. We then have hundreds of different developers all making hundreds now of different applications, all going off in different directions. Some will burn and die out, some will progress and go to the next level. And then to try and guess which ones are ultimately going to be successful is nearly impossible. As right now, blockchain and the different layer ones are all exploding into different directions. On to some quick stats, and let's compare on one page Ethereum versus Avalanche. Now, if we did Ethereum as it stands today, I don't think it's the best comparison, as soon Ethereum will be changing, so I'll do it for Ethereum 2.0. First up, the creators. We have co-founder Vitalik Buterin, but he is the guy that created the white paper and is really leading the project against Emin Gun Sirer. And he has a great background. He was educated at Princeton and then taught at Cornell University for over 20 years. They both work from a proof-of-stake protocol. Ethereum's launching probably in Q3. Now, you do get a better track record with Ethereum as it launched in 2015 versus the 2020 for Avalanche. Now, the transactions per second is a bit tricky. Nice and easy for Avalanche, as it's currently 4,500 transactions per second. With Ethereum, it's a bit more tricky. Okay, so today it handles about 55, but then if you look at the layer 2 scaling solutions, they claim to offer up to 65,000 as from today already. And when Ethereum implements sharding with layer 2s, it can be going to 100,000 transactions per second. So how fast is fast enough? Well, just to give some perspective, Visa is currently doing about 2,000 transactions per second. It is able to do more, but what is needed from the Visa network is about 2,000. Now, when it comes to the supply, there is an unlimited supply cap for Ethereum, and Avalanche has a hard cap of 720 million. So all things being equal, a fixed supply is better than unlimited. However, again, not so straightforward. When Ethereum 2.0 launches, Ethereum will be going deflationary. So the supply will actually be contracting, where Avalanche, its inflation rate is 6%. So deflationary is even better than fixed. And there's currently almost 300,000 validator nodes for Ethereum 2.0 versus the 1.3 validators for Avalanche. So I would say Ethereum 2.0 is going to be more decentralized than Avalanche. But another caveat is that decentralization is actually very hard to measure, and there's no real defined way. Some other protocols will say you have to use the Nakamoto coefficient, but again, this has flaws, as it marks Ethereum very low, even though I would say it's arguably will become the most decentralized platform. So we're going to move on to how they are looking right now. Now, I've made the decision not to jump into the technicalities of each chain. As with Avalanche, it's actually 3 chains: the X chain, the P chain, and the C chain. But for me, it doesn't matter if you've got an X chain, a P chain, a Q chain, an R chain. If no one's actually using your protocol, then it's all pointless and it's all wasted time digging into the technicalities. I think it's more important to take a look at how many people are actually coming on board and using the network. So that will be the focus of this video. Starting with the size and growth of Ethereum's network. So this is Ethereum's unique addresses, and you can see it's had an amazing growth trend and it isn't slowing down anytime soon. And just now that Ethereum now has over 175 million unique addresses. So a very strong, powerful network from Ethereum. Now, with the Avalanche C chain, this is how it looks. You can really see it's from October, November last year that Avalanche really exploded, and the growth rate is a lot steeper and it's growing a lot faster than Ethereum. However, even today, Avalanche has just over 2 million. So this is 2,000 thousand, so that's actually 2 million. And remember, Ethereum was 175 million. So Avalanche is a lot smaller. It's the new up-and-comer. However, the growth rate is looking excellent. So that's the network size and the network growth. Let's take a look at some of the biggest use cases right now. And we're measuring total value locked, and this is on DeFi, decentralized finance. So we can see Ethereum is the market leader by far, but there's now lots of up-and-coming competitors that are taking market share. So Ethereum currently has about 110 billion of total value locked, TVL, across 546 protocols. Avalanche is now sitting at number 4, 173 protocols, and it now has $10 billion of TVL. So Ethereum 10 times the size, but Avalanche, the fact that it's number 4 out of hundreds is also excellent. And the other big use case is NFTs. And we can see when it comes to NFTs, Ethereum still is completely dominating this market, and it's done almost $20 billion in total volume. Now, Avalanche is sitting at number 8, and its total volume is only 23 million. And in fact, there is no other competitor that's even close to Ethereum when it comes to NFTs. Covering some of the main pros and cons, and for me, for Ethereum, one of the big pro points is that it's very well established. It's got a much bigger track record, it's been pushed at crazy scale, and it really hasn't broken, although gas fees are quite high. I would class it as the lower risk option for this reason. It's been tried, it's been tested. There's companies that have already added ETH to the balance sheet. It's more well known, bigger network, etc., etc. And the potential for Ethereum is excellent. So with Ethereum 2.0, and then once sharding comes along, Ethereum is going to be fast, it is going to be cheap, and it is going to be very decentralized. Now, for the cons, it's pretty much where Ethereum sits right now. So as of right now, the gas fees are very high as the network is finding it hard under this extreme usage. Layer 2s, although are making progress, they're not that easy to use and they still have a long way to go. So Ethereum right now is quite frustrating to many smaller investors. And when it comes to Avalanche, I would say it sits very well in the trilemma. It is very fast, it is very cheap, the security is good, and it is quite decentralized. As you saw with the growth rate of the network is growing very fast, it's looking very strong, and adoption is very positive. And it also comes with some great interoperability benefits. So it is compatible with Ethereum. On the roadmap coming soon, it will be integrating with Cosmos, which then makes it more interoperable with several other chains as well. And for the cons, I would say it is the higher risk option just because it is new. It is having to come through with more tough competition than ever, and it's really untested. It hasn't been pushed to the same scale that Ethereum has, and in fact, in February 2022, it did run into some problems when the network was being pushed, so not fully tested at extreme scale. The battle for the ultimate smart contract platform is on, and today we looked at the new up-and-comer Avalanche against the market leader Ethereum. So with Ethereum, you get a trusted chain that has years worth of transaction history, you get an excellent track record of being able to handle extreme volume, although that did come with some higher fees. There's over 20 different companies building out layer 2 scaling solutions, and there's an excellent roadmap that when it comes to fruition will make Ethereum cheap and fast and decentralized. And with Avalanche, you get many of those things already. It's fast, it's cheap in comparison, and it has a good degree of decentralization. The network growth is looking really strong. TVL is growing very, very quickly. It's been referenced by Sam Bankman-Fried as a great new up-and-coming chain, but it is yet to be tested at really high volume. And so for that reason, I would class Avalanche as the higher risk option right now, as it's not been battle tested at full scale. And it's going against many other top competitors coming through. though if successful, you will likely get a higher return and make more money with Avalanche. So it comes with a higher risk, higher potential reward profile. And just for full transparency, I personally own both, but I do own a lot more Ethereum than Avalanche as it just suits my personal risk profile. So there you are, guys. Hope you found this useful. What do you think? Do you think Ethereum will hold out and complete its roadmap before these top competitors can really break through? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.